Good evening, everyone. I'm delighted today to be in conversation with four amazing people who also happen to be Penguin authors, and I'm really honored to publish all of them. They're all best-selling authors, and their books have been published recently. So please welcome all of them. Today we have with us Saurabh Mukherjee, Rakshit Ranjan, Salil Desai, and Harish Bhat. Saurabh, is a Penguin author, a best-selling author of several books. He's also a fellow of the Royal Society of Arts and an alumnus of the London School of Economics. Recently, he's written a book called Diamonds in the Dust that's climbing the charts as we speak. And I hope you all get a copy and read the book if you haven't done that already. Rakshit Ranjan manages Marcellus' flagship consistent compounders fund. He's an engineer from IIT Delhi and a CFA as well. He also co-authored with Saurabh on his earlier book, Coffee Can Investing, which also received much love from all of you. Welcome, Rakshit.
Thank you. Thanks.
Salil Desai is a CA and an MBA, and he has more than a decade of experience in covering diverse sectors in Indian equity markets, including at India's largest family investment office. He also manages some of the large advisory portfolios at Marcellus. Harish Bhat is also here. He's written a book called Tata Stories just a few months back. So we have, best-selling authors of recent books. Please show both the books, Saurabh. Thank you so much. Harish, is the brand custodian at Tata Sons. He's worn several hats. He's had several roles in the Tata Group over the past 34 years, including being managing director of Tata Global Beverages and chief operating officer of the watches and jewelry business at Titan. He's an engineer from BITS Pilani and holds an MBA degree from IIM Ahmedabad. Welcome, Harish, to our discussion today. It's a delight to have all of you here together. My name is Milee Ashwarya. I don't come from the world of business, but I do, manage the business of publishing for Penguin India. And I'm lucky to have all these four men who will be able to, I think, answer most of your questions towards the end of our session. We'll take up your questions. Don't forget to, ask your questions in the chat box. But, I will begin first by talking about, the key themes that, both the books actually have covered. Although, Tata Stories and Diamonds in the Dust are different books, but they do have, areas where there is common ground. And one of the key themes that is brought out in both these books is the theme of timelessness. So I'll start first with, Harish, and Tata Group, as we all know, is more than 150 years old. It survived, it sustained, it's a group that has businesses from salt to software, as they say. So what is the secret behind the longevity and the timelessness of the group, Harish?
Yeah, so Milee, thank you for that question. I think diamonds are such a wonderful metaphor for timelessness to begin with. I'm sure everyone on the show loves diamonds, I'm sure. If you don't, then let us know. But so Milee, here's what I have to say. Okay, the Tata Group is 153 years young this year and growing from strength to strength. And I've often asked myself, how has this group achieved this kind of timelessness? I think it owes itself, Milee, to three or four things. One is when our founder founded this group, Jamshedji Tata, way back in 1868, he said he wants to create a group where the community is center stage. And what we do eventually goes back to the community through the structure of the Tata Charitable Trust, which owns 66% of Tata Sons today. So that's one reason. And that's enabled our group to live in harmony with the community and contribute a lot to the nation. The second really, Milee, is I believe timelessness is also a result of the consistency with which the group has performed. If you look at products of this group, okay, many people on this call will probably be using Tata Salt or Tata Tea or Voltas air conditioners or cars from Tata Motors or watches from Titan, jewelry from Tanishq. I think the group has emphasized the excellence of products and services that we provide our customers. And there is a lot of investment, a lot of focus which goes into ensuring that the products and services we give our customers are very, very consistent. The third reason, Milee, is really our companies have done a lot of work in building sustained competitive advantage for themselves over the years. And that, I think, shows in the progress and the results that are achieved by each company of the group. Those competitive advantages are different for different product categories. And I believe that, prudence in capital allocation has also played a key role in the group, living on and prospering for 150 years and more. So those are kind of the reasons, Milee, and many of the stories in my book, Tata Stories, actually cover each of these themes. And if I may just conclude, it's also the pioneering nature of it. Every generation, the group has invented businesses for the next generation. It could be steel in the 1890s. It could be Tata Consultancy Services in the 1960s and 70s. It could be Titan in the 1980s, and Tata Digital today. So I think there's a constant reinvention by the group to remain relevant to the consumers of a certain age and generation.
Thank you, Harish. We'll get more into, the stories of people and, examples from the group as we go along. I'd like to come to Rakshit now. In the book, Diamonds in the Dust, you've spoken a lot about patience, how patience is a very important virtue for investors and how it's really important, to wait and get competitive advantages. So would you like to tell us more about how timelessness plays a role and patience also helps investors to get maximum out of their equity?
Sure. Thanks, Milee. So I think, yes, you rightly said timelessness, patience, and in a sense, time is certainly the best friend of an investor in several ways, I would say. Firstly, investment discipline maintained by an investor over a long period helps him or her to benefit from the massive power of compounding, right? Which Albert Einstein had actually called it as the eighth wonder of the world, power of compounding. Longer the time period, more the timelessness, greater is the benefit of power of compounding to an investor. That's the first area in which it's a friend of an investor. The second one is that timelessness helps investors crush the risk of market timing in their stock portfolios. So investing in companies which deliver timelessness and hence holding these stocks in your portfolio over long periods of time makes the timing of entry exits redundant in your portfolio. And hence,
would you like to give us an example, Rakshit? It's an interesting point.
So think of it like this. If you picked up, let's say, an Asian Paints, a Nestle, a Pidilite, a Titan, right, from the Tata Group. If you picked up a TCS, if you picked up these types of companies, then for a TCS, a Titan, and Asian Paints, even if you bought these stocks, let's say, every year at their 52-week high, right, it would not have made more than 1 percentage point adverse impact on your overall portfolio's performance, compared to had you bought them at their 52-week low instead of 52-week high, right? So to that extent, when you buy is an irrelevant question for timelessness in the companies that you can hold on to over very long periods of time. So that's actually the crushing the risk of market timing, because this is actually the biggest risk that an investor typically ends up playing in the stock market, right? There's a third area where investors find timelessness as the best friend, which is that timelessness also makes it easy to pick undervaluation in stocks and get the upside related to undervaluation. So not just crushing the risk, it's also about the upside. This is because longevity of cash flows, sustainability of competitive advantages is the most undervalued aspect of any great company's share price, right? So those are the three areas. And then in our book, in Diamonds in the Dust, we've shown how investors can identify timelessness in the companies in which they invest. The first one is around pricing power, which is actually an aspect that protects such companies from intense competition or adverse macro events. The second aspect is around allocating the profits of higher pricing power into areas that further strengthens their business or add new revenue growth drivers over time, and more importantly, make the business irreplicable by driving disruptions and evolutionary changes in their industry. And thirdly, these companies, they build timelessness by creating institutions through decentralized strategic decision making and ground level business execution, which actually is something that I think most Tata Group companies have done for several decades.
Interesting. For more guys, you'll have to read the book. So Rakshit,
If I
don't
could just
divert all the
motivate people, Milee,
secrets.
a little bit on that. I think
Yes.
the reason we paired these two books, right, is in a way Harish's book, the Tata Tales. Harish's book approaches this timelessness issue from the kind of the heart perspective, by battlefield stories of the Tata Sons, the Tata Group over the last 140 years. Harish's book is the exemplification of the timelessness. Whether we like it or not, Diamonds in the Dust approaches the book from a head perspective, from a hard-nosed financier's perspective, but ultimately it's the same theme. Timelessness from a numerical perspective, timelessness in Harish's book is from a qualitative perspective. And that's why the twinning is actually very interesting. If you read the two books together, you get a lot of value out of it, because one is slightly numerical and spreadsheety, and the other appeals to the heart. The Harish's book appeals to the heart.
Yeah, but both also hopefully make us a lot of money, right? Because in the end, if you're patient and we invest in stocks, or we make investments which are timeless and have patience, then it'll bear fruit. Also, if we reinvent and go in for businesses that sustain, then that also, of course, is beneficial for us. So, with that, we will move on and pick up another theme, which is common in both the books, because Tata Group, as we all know, is an institution. It not only has a range of businesses, but it also has built several institutions over the years. And we have Harish, who also heads all the Tata, brands. So, Harish, would you like to tell us a bit more about, the emphasis, on, building institutions along with businesses that is very important for the group?
Yes, Milee. So I think, the Tata Group has built several institutions over the decades. And I'd like to focus in this conversation on institutions which are around knowledge, around research and development and technology, which I think has been a key area of focus. I'm not talking here of, just Tata Consultancy Services or Titan or Tata Motors, which of course invest in the technology required, in the research and development required for their respective categories and do it very well. If you go back to Tata history, the first ever scholarship for overseas education of Indians was started out by Jamshedji Tata in 1892. Why? Because he wanted a large number of ICS officers to be Indians. And indeed they were. At one point in time, I think about 30% of all ICS officers were Tata scholars who had gone through that scholarship. But a few years later, he also gave about half his personal wealth to create what is perhaps the finest science university in India. Even recently it came out top on the Indian university rankings, which is the Indian Institute of Science in Bangalore. And why did he do that? He did that because he thought an institution of higher learning, of knowledge, of technology was very, very important for our country to progress. I can go several years forward. Look at what happened in the 1940s and 1950s. The Tata Group once again invested through the Dorabji Tata Trust in the creation of the Tata Institute of Fundamental Research, which is actually where India's first digital computer, the TIFRAC, was created, and which is where Dr. Homi Bhabha did pioneering work that contributed towards the atomic energy revolution in India in those days. I can take the example of the Tata Institute of Social Sciences. I can, So if I look at each, or if I look at the Tata Medical Center in Calcutta, or the Tata Memorial Hospital in Mumbai, pioneering research in the area of cancer care, which is very important for the country. So I think, Milee, the creation of institutions which develop knowledge and the investment in technology and knowledge. I've told those stories in Tata Stories. Much like I think Saurabh and Rakshit and Salil have told those stories in Diamonds in the Dust. But the stories are really one of investment in the future through single-minded focus on research and development, on technology, on knowledge. I think that's what creates great institutions and great companies.
Absolutely. Salil, I'd like to ask you about an interesting, case study that we have in Diamonds in the Dust. And of course, there is again common ground here. You have you've written about TCS in the book. Would you like to tell us more about, how, learning and knowledge, really helps us to, rise in the modern world?
Sure. Uh, uh, TCS actually is a pretty interesting case of, they operate in a knowledge-based business, right? So training, development, learning are critical.
Yeah.
Today, the company is 500,000 employees, right? I think it's the largest private sector employer in the country. And given the nature of the business, it is not possible to have achieved this scale without having a fundamentally strong training and learning organization within the company. Right? And TCS realized this, I think, way back 1993 is when the thought of centralizing the training function came. They decided to set up a corporate training institute in Trivandrum, right, which became one of the first ones in the industry to have this kind of a program for fresh joinees. And today, this institute, Tata TCS, I think they take in 40,000 freshers every year. So you can imagine the scale of training infrastructure that is needed.
Yeah.
And these guys thought of it in '93. And what is remarkable really is that this was 7 years before Y2K actually started the whole Indian IT boom, where there was a need to recruit and train at scale. Right before that, I mean, it was a growing industry, but the boom really started after 2000, and these guys were prepared half a decade before that.
Yeah.
And what this helps is that the opportunity to learn, to grow, is also very important for the employees, and that serves as a retention tool. So today, TCS has the lowest attrition rate amongst all peers. And today, when the markets are starved of talent, it actually helps that fewer people are leaving your company, and you don't have to hire and retrain or train and retrain more people for your kind of just day-to-day business needs. In fact, many years ago, Tata Steel used to run a campaign called "Ispat Bhi Hum Banate Hain," right? Because we also make steel. I think TCS is probably the largest training institute in the country today. They could go with saying that we train people, we help them grow. But yes, by the way, we also deliver large-scale, complex IT projects. Right? So I think that really is the core of TCS as a company.
And if I could just underscore how valuable this is, right? Because I think there'll be a lot of people watching who will be saying, well, it's all very well to know that Tata Group created Tata Institute of Social Sciences and Indian Institute of Science, but where's the money? So TCS, in the last 15 years, has grown 30-fold. This company has grown 30-fold in 15 years, right? And that growth is because they have invested in talent, in training on an epic scale. It's the largest private sector employer in the country. This is world domination. I think this is the world's second largest IT services company. Immense creation of wealth, immense creation of institutional strength for the country, and all because one group decided to go big on India, invest big in Indian talent.
Absolutely. It's a phenomenal story. And I think we do talk about it, but I think we don't talk about it enough still. And we all need to be very proud of this company. And, just the whole TCS story is really, really inspiring, not in terms of the money and the revenue itself, but also in terms of the employment that it has generated, in the country. So fabulous story. And I'd like to move on to, the the people now, the people aspect or the promoter aspect of companies and businesses, which I think is absolutely key, because it's not ever a smooth sailing to run a business. Times change, there are ups and downs. There are times when you have to go through rough patches, take difficult decisions. So you really need to have people who can tide over those difficult times, and help actually sustain businesses. So we've seen that, Harish, in the Tata Group, it has had phenomenal leaders, and you've spoken about some of them in your book as well. People like Rusi Modi or Sumant Kulgaonkar at Tata Motors. They've seen phenomenal changes and come out on top. Would you like to tell us more about their stories?
Yes, Milee. So these are very interesting stories that I have narrated. Let me start with Sumant Mulgaonkar, for instance, the person who, along with the JRD Tata, when JRD Tata was chairman, Sumant Mulgaonkar built Tata Motors. Now, he emphasized, as I will read out a bit from my story, he emphasized that engineering excellence, which is very tough to achieve, engineering excellence in the creation of automobiles, in the creation of trucks, has to be achieved not just to Indian levels, but to global levels. And there's a nice story in my book, Milee, which illustrates that. Okay, he used to, engineers of Telco, which as it was then called Tata Motors, they created the country's first fully automated transfer machine. And they went to Sumant Mulgaonkar, and with pride, they showed him this machine. Listen, this is the first time it's being made in India. Sumant Mulgaonkar looked around that machine, and then he went back to his room, and he called one of his directors, Arun Maira. And Arun went there, of course, hoping to receive congratulations from him. Sumant Mulgaonkar said, did you see all the, he said, did you see all the hydraulic pipes in that machine? Not all of them were vertical. Some of them were not. So you will strip down this machine and build it once again, because that's the only way to achieve engineering excellence. And then he told Arun Maira something. He said, Maira, try to make for perfection, but perfection is no trifle. And he followed that philosophy through his life, maybe. Engineering excellence is tough. I'm talking of the 1950s and 60s. Even today it is. But he took that tough challenge head on and was able to establish that level of engineering excellence, which is why, Tata Truck today are ubiquitous across the country. And fleet owners kind of swear by Tata Trucks, saying that they're the best in their fleet. So that's one example, maybe. But if I were to take another example of the same kind of drive for excellence that leaders in the Tata Group have demonstrated, let me take the example of Xerxes Desai and Titan, the company that Xerxes Desai built as managing director. He recognized early on that design excellence, technology excellence, as well as a very good trade and distribution network across the country were very important, but challenges which the company had to take on and achieve mastery on. And he focused all his energies in building a very talented team which would be able to achieve design excellence, which was able to achieve technology excellence, not just in craftsmanship, not just in watches, but in jewelry and now in eyewear as well. And also build, a very, very committed team of franchisees and distributors across the country who have a very, very synergistic relationship with Titan. So the lesson, Milee, from these two, and I can go on and speak about many other leaders of the Tata Group, but the lesson from from Sumant Mulgaonkar and the lesson from Xerxes Desai is really that they pushed to establish mastery over the tough things in their industry, and which has stood those companies in good stead over many years and decades. There are many other stories of leaders here in my book, Milee. There are, of course, legends, yes. Jamshedji Tata, JRD Tata, Mr. Ratan Tata, but there are also people like Rusi Modi and Darbari Seth. And, like Saurabh said, these are stories which appeal to the heart, but they illustrate a premise which comes up in Diamonds in the Dust, that you have to take on the tough challenges and resolve them. Only then do you build sustainable companies.
Absolutely. And like Harish just mentioned, there are many more such stories in Tata Stories, so go get your copy.
Yes, of course. Pick up the thread there. So Harish mentioned Xerxes Desai and Titan, right? Yes. Once again, I'll link it to making money. Titan has grown at 32% compounded. Free cash flow has grown at 32% compounded for the last 20 years, right? If you do the
Wow.
broad maths, that means Titan has grown by something like 140, 150x in the last 20 years. So even at the turn of the century, Titan was a big company. It has grown at 150x in the last 20 years. That is the source, that is the sort of wealth creation we're talking about, right? And it comes from extraordinary people putting in extraordinary efforts to build institutions. And that's why we need to celebrate these firms. We can obviously live in the present and celebrate whatever's latest, greatest, hottest, fanciest. But if we take long sweeps of time and
Mm.
celebrate extraordinary people who build great institutions, it actually makes life not just more interesting. It not only gives you and me the courage to build great institutions in modern India, it also actually makes a heck of a lot of money. And in that same vein, in chapter 4 of Diamonds in the Dust, where the
Yeah.
TCS case study that Salil spoke about is given, we've also
Yeah.
used Asian Paints as a case study.
Yeah.
Over 40 years, these guys have grown 2000x by doing extraordinary things in implementing technology in a voluminous industry, which other
Yeah.
people in India haven't been able to sort of tame. And hence the link between timeless tales of compounding and creating great wealth is actually the link is at the hip. These stories are joined at the hip.
Saurav, would you like to tell us a bit more about Asian Paints for the benefit of our audience today?
So I'll take a cue from chapter 4 of the book. We've described in chapter 4 of Diamonds in the Dust. And for
Yes.
those who are interested in the 2016 book that Penguin published with us, Unusual Billionaires, chapter 2 of
Yes.
Unusual Billionaires, what we've described is a 50-year journey. So in the 1960s, Asian Paints wasn't the leader, right? You can imagine 1960s ICI, today known as AkzoNobel, was the leader. They still make, we would still argue ICI makes AkzoNobel makes the best paint in India. But Asian Paints figured out through the use of technology that they could turn the tables on the market leader. So they changed the industry. They stripped out two layers of the supply chain. Wholesalers and distributors were taken out. They put instead of that a supercomputer, India's first supercomputer by a private sector company. They spent 8 crore rupees, which back then was a fortune. 80 million rupees back in 1970 was a fortune. And using technology over 50 years, they have basically invested in what is known as big data today. They have collected data on paint demand in India, in every street, every neighborhood of the country for every hour, and using that masses of data which they fire into their computer systems, into an SAP system, they're able to predict with great accuracy what will sell in India, say, for the sake of argument, on 19th November in Delhi, in Greater Kailash, in M Block at 5 p.m. in the evening, down to the last shade of blue with 98% accuracy. That forecasting of paint demand using world-class technology, using proprietary data, is what makes Asian Paints a money machine, right? It's a 50-year slog to build a compounding machine, which we and our clients benefit from. And in interest of full disclosure, folks, we are invested in Titan, in TCS, and in Asian Paints in several of our portfolios. So we are talking about companies that Marcellus and its clients have investments in.
Absolutely. Well, with that, we will take up some questions from our viewers today. Let me start with Malhar Manik, who wants to know if institutions have a degree of understated profits. Example, by front-loading customer acquisition costs, expensing R&D in P&L instead of capitalizing, etc. Who would like to take up this
I think we
question?
should give this to Rakshit. This is Rakshit, one of Rakshit's favorite topics.
Absolutely.
Okay.
Rakshit, over to you.
Sure. So look, there are two types of front loading of costs. One is an investment and the other is siphoning off. So if you try to suppress the profits artificially, that actually falls into the area where in the book we've given case studies about how you should identify accounting fraud, where a great underlying business doesn't want to share the greatness with minorities. So that's the negative part of sort of understating the P&L, the profits, etc. But then there is a positive part to it, right? So investments in technology, many of those investments cannot be capitalized; they have to be expensed. investments in human resources, investments in assets, tangible assets. Right? These are investments which certainly have to be front loaded, right? Whether it be say a Titan or a TCS or an Asian Paints, right? The kind of strength that they possess today, the kind of free cash flow that is going out of these businesses today, that is an outcome of investments made in talent, in technology, in systems, processes, which could not be capitalized. They were expensed. They did suppress initially the free cash generation capabilities, but that's how a firm builds through investments the long-term future. So yes, institution building does involve making those investments way ahead of time, and that at times does lead to some suppression of profits. But then that's why we call investments as a present value of all future cash flows. You do not have to look at what the P&L today per se is showing. You have to look at what the P&L can show up in the next 10, 20, 30 years.
If I can just make a link to the discussion, right? Someone as senior as Harish Bhat is the brand custodian of the Tata Group, right? Just imagine the cost that the Tata Group is incurring in nurturing the brands, right? The Tata brand is essential. Obviously, the Tata Group company's P&L, their profits are not going to reflect fully the amount of effort that Harish and his team and the group are taking to nurture the brand. And yet that brand, the Titan brand or the Tanishq brand or the TCS brand or the Tata brand generally, these brands are central to the wealth of the shareholders. And clearly, therefore, you get a bargain as a shareholder. You're getting world-class brands nurtured by people of Harish's caliber, and yet the P&L doesn't reflect the entire cost of that.
Absolutely. Harish, would you like to weigh in here? Because, this is also close to, very close to what you do every day.
Yes, Milee. So let me come at it from my perspective, Milee. Saurabh is right. There is a lot of investment which goes into brands. And, as a marketer over the past 34 years, I've realized that investment doesn't flow through on a year-by-year basis. A lot of the investment which goes in creates the brand, builds it up and up and up until the brand, has reached a stature which is virtually iconic in the eyes of its consumers, in the eyes of its stakeholders. There is a tipping point beyond which the brand then starts attracting a large number of consumers across the country. I've seen that with Tata Tea, with Titan, with Tanishq, all the companies that I've been part of. So the question is right. There is initial investment required to build a brand, which gets expensed every year because that's the way we do our accounting in the country. But actually, brands have history. The brand builds on many years of historical investment. And the asset keeps accumulating over time, and often you don't realize that how powerful the brand is. So let me take the Tata brand for instance, Milee. I'm not sure 120 years back or 110 years back or 100 years back or 30 years back or 20 years back, people stopped to measure, all the investments going into the Tata brand, what are they yielding? But at the end of the day today, here is a brand which has 700 million consumers in the country. Here's a brand which by itself, brand finance is valued at about $21 or $22 billion, just the brand itself. And it's not just the number one brand in the country, but the only Indian brand in the top 100 in the world. So there is a lot of truth in what Saurabh says and what Rakshit have said. Investments keep going in every year. There is history which then builds those investments, the results of those investments in the years ahead. The Asian Paints example was excellent. 50 years of investment have built Asian Paints to where it is today.
That's right. We'll move on to our next question today from Apurva Narayan, which is about making money with IT stocks. So how do we select IT stocks? Who would like to answer this?
I think Salil is our tech guru, and he's selected an IT stock for us already. So Salil, if you can just explain.
Salil, did you invest in TCS or Infosys early on?
Well,
help us understand.
I like not to make that disclosure right now, but see, IT, when we were discussing the TCS case study, today, IT is all about having the right kind. So rather, one part of IT investing is all about getting the right kind of people onto the right kind of projects, right? And this has to be done in the most efficient manner. So that is why the ability to hire and train at scale is the most critical advantage that any IT company could have. And I would say the Indian industry in general has mastered this. Right? Today, as a sector, probably they are the largest formal employer, largest employer of formal labor in the country. And all of them have done a fantastic job. But obviously, there is an kind of an edge which one company will have over the other. The second part is that apart from ability to hire and train is the ability to retain. Right? I'll give you an example to bring out why it is such a critical thing. Now, there are some companies where attrition rates are 25-30%. Okay, so now think of this in the context of TCS. 500,000 employees, if they had a 30% attrition rate, which means 150,000 people are quitting the company every year. To maintain the pace of growth, they have to hire another 150,000. Right? Hiring 150,000 people is going to be impossible. Right? Even in a country as populous as ours, to get the right kind of skills is practically impossible. So the second thing you look for is that a company which is able to keep attrition rates as low as possible. Right? You can't have it at zero. It's the nature of the industry. But the idea is that across cycles you have lesser attrition rate. And third, and I think the another important factor is that are you investing ahead of time, right? Which say the question which was asked earlier on brands, right? Which is a form of an intangible asset that you're creating. The same thing is with a lot of other investments related to technology, related to product development, which are all intangible. Are you investing it ahead of time? Now, it is possible that it will not work out, but a smart management will allocate capital in a way where they don't bet the whole company on it, but make sure that they have a kind of a foot in the door for an emerging technology. So if it becomes mainstream in the future, then they are there at the forefront to take advantage of that. So these are the three, I would say, the most critical aspects of finding an IT company which will be, so to say, timeless. And you don't look at what's happening now, what is the percentage of revenues from.
If I could just contribute my 10 cents here, right? We discussed brand and we discussed HR and training, right? So both are intangible assets, right? Both are intangible assets. And in one of the most famous papers written in economics in 1992, one of my professors, a man called John Sutton at the London School of Economics, said in 1992, he wrote a paper called Sunk Costs and Market Structure. In plain English, what he said was in any industry where intangible assets, brand, R&D, training, in any industry where intangible assets becomes the core competitive advantage, that industry will consolidate into the hands of one or two companies, right? We've discussed two companies which are the exemplification of that. We discussed Tanishq Jewelry and we discussed IT services, brand and trust in Tanishq's case, training and HR in TCS's case. Intangible assets become the main competitive advantage. The industry consolidates into the hands of one or two companies. And to build those intangible assets is decades of hard work and effort.
Yes. Thank you, Saurabh and Salil. We move on to the next question. We have a lot of questions. We'll try and take as many as possible. And I think for the rest, we can always reach out to the authors. Moving on to the next one, as competitive advantages move from tangibles to intangibles, are metrics like ROCE declining in importance?
I think Rakshit, and then perhaps it'll be great to have Harish's view on this. So I think Rakshit and Harish will be fabulous.
Absolutely.
No, so see, what needs to be understood is that any business without capital employed in an efficient manner, right, is probably not worth investing in. It's not a business which will last with dominance and profits for several decades. So as a concept, returns on capital employed is an evergreen concept because you are investing up some capital and you're getting some return on it. What needs to be recognized properly is what constitutes capital employed, right? As we were previously discussing, that there are some expenses, some investments, I would call it, not expenses, some investments which cannot be capitalized, right? Which have to be expensed. Similarly, there are certain kinds of investments which go on the P&L. Let me put it in a very simple term. They don't go directly in gross block or fixed assets on the balance sheet, right? So the definition of capital employed has to evolve if the nature of capital employed is evolving. It can't be gross block if the capital employed is intangible. And hence, provided you capture in this ratio of return on capital, provided you capture the denominator in its true essence, right? For which obviously, I mean, you'll need to think through very deeply about what really is the capital investment, capital employed going on to the P&L, which might not be part of the sort of equity shareholders' assets, as they call it on the balance sheet, right? That is important, but the concept will probably last for several decades. It's an evergreen concept, return on capital. Harish?
So Milee, I second what Rakshit has said. There is an accounting definition of capital employed in the denominator, and that leads to a certain ROC, which you can see on the, you can see in the financial analysis of companies. But the true capital employed, how do you really, how do you value intellectual capital which is involved? How do you value intangibles like the brand which is part of the capital that the company uses? So the denominator has to be carefully defined, but otherwise producing return on capital is very important for a company. I think it's essential, and therefore this metric will to me remain quite timeless. I don't think it's going away anywhere. Therefore, I'm sure when it is people like Saurabh, Rakshit, and Salil from Marcellus who actually wear their hats, they look at the accounting capital, but they also look at what is the true capital that each company has. And I think their book kind of reflects that true capital is much more than just working capital and fixed assets which are invested in the company.
I think we've got a relevant analogy here in this session itself, right? Penguin's relationships with their authors across the world is presumably one of their critical assets. I don't think it'll be captured in Penguin's balance sheet. And yet I think Penguin is defined by the relationships they have with authors around the world and the trust that they evoke in readers, right? So the quality of the product that the reader is getting and the author is getting a world-class platform. Penguin, therefore, is at the center of a network of authors on the one side and readers on the other side. That network is worth a lot of money, which is why I guess Penguin itself, Penguin Random House, is worth a lot of money.
No, absolutely. I think relationships and, long-term, I think planning for us in terms of investment in people and authors, technology, readership, all of this matters a lot to us. And it's actually the core of our business. Again, we deal with knowledge, learning, we deal with people a lot, new ideas, bringing forth new voices. So, it's totally, I think, in sync with what you all are saying, and I agree with you. We'll move on to a comment from Shiv Shankar Joshi, who asked if Marcellus has any Tata companies in their portfolio. I think Saurabh already answered that. You already have TCS and Titan, I believe. Yeah, Titan, I believe. All right. And there's one more for you, Saurabh, here, which is related to timelessness. Siddharth Chawla says, timelessness is very much valid for Tata companies in your stock portfolio like Titan and TCS. How much it's valid for LC portfolio like Galaxy, Surfactants, or other smaller franchisee? Also, is this valid for someone who is, let's say, 30, 33 years old, working in a startup and looking to create wealth by investing, and also by working 20, 25 years at a company and accumulating wealth by equity or ESOPs?
Right. So I think Little Champs, LC is Little Champs. Little Champs is our portfolio of smaller companies, not the big guns. The big guns portfolio is Asian Paints and Titan and so on. So for Little Champs, right, the concept of time is even more relevant, right? Just like my kids are still in secondary school. I hope they'll go to university, and I hope they'll succeed in professional life. The younger a franchise, the more nascent a franchise, using the analogy of a child, the younger a franchise, the more nascent a franchise, the greater the effect time will have on value, right? So TCS is 50 years into its epic journey to become a world-class IT services company. It's worth, close to hundreds of billions of dollars. A small company, I think Anal Kailamin say $2.5 billion. They began 30, 40 years ago, but in the last 10 years, they found their stride. Time is a greater friend of a well-run small company. I mean, I would certainly hope for Marcellus's sake, time should be a friend of a well-run small company, and therefore timelessness and the messages arising from Tata stories, the messages coming from Diamonds in the Dust are even more relevant, right? Are even more relevant, and the fact that we don't see them as such, it's actually a very interesting insight into human psychology. A lot of people believe small caps are here and now. I'll be buying today, selling tomorrow. I'll be in small caps for a year. It's an interesting insight into human psychology. If I told you that to measure your child's or my child's progress, you need the next 10 years, you'll agree. But if I said for little champs, it's really the next 10 years that matter, you'll say, no, no, it's a small cap stock. I'm in it for a year, right? But that contradiction highlights how fallacious the thinking in stock markets is, even more so for smaller companies. You got to load up high quality, clean management, good management team, load up on the stock, stay invested for a extended period of time if you want to benefit from it. 130 years ago, Tata Steel was a small cap. Right, and you can see what 130 years of compounding does. It creates a conglomerate with the power of Tata Group. Look at the little champs today as protean, as nascent Tata groups in the making, and you'll see how the future works out.
Yeah. So, Milee, I want to add some poetic flavor to what Saurabh said, because he's from the head and he's made his point very clearly. But going by the title of his book, Diamonds in the Dust, and there's a story about diamonds in my book as well. His little champ example reminds me that, it takes many, many years for a diamond to form. I think it's not just that once you get a diamond, it's timeless, but the formation of a diamond takes several million years under the earth. Wow. So if you actually found the place where the diamond was just about to evolve, let's say 100 years into its journey, you would not find a diamond there. So it will require expertise to spot that diamond, and then wait until it has matured into a shining gem. So I think his little chance example reminds me of that, which is the art of picking those little champs right at the beginning, which become diamonds.
Absolutely. I now come to the last question for today, and let's see. Let's go to Abhijit Chokara. He wants to know how to analyze financial business. It's a general question. Who would like to take this one?
I'll take that. So I presume you're asking about, there's two types of financial businesses. There's balance sheet, i.e. lenders, and then there are P&L, i.e. asset managers, broadly speaking. What you're trying to do on both of them, first off, is look out for naughty accounting, right? So chapter 3 of Diamonds in the Dust, we've given you a full chapter of how naughty lenders book their books. There are specific tricks that naughty lenders use. We've given 2 examples, Diwan Housing and Yes Bank, as how aggressive accounting can be done. So we as investors, first off, we have to see through the subterfuge, the naughty accounting. Once you've established that the accounting is clean, the next thing you're trying to do is figure out if the lender actually lends prudently. And a simple way to measure that is look at the return on equity of the lender. Return on equity is nothing other than profits divided by the equity of the company. Look at return on equity and see if it's above 15% consistently over a 10-15 year period. So if the books are clean, the return on equity is above 15% for long periods of time, you're now in your final leg of analyzing a lender. You're trying to assess, are they focused on a specific area of the country where they have a competitive advantage? They have a barrier to entry, either around brand or around data analysis and credit underwriting, or around their distribution reach and so on, right? So 3 steps: cleanliness, rationality in capital allocation, and barriers to entry. And we've given you examples in chapter 4 of the book as to how you can do this sort of analysis on lenders. On asset managers, the first piece, obviously, the fraud piece is just as relevant. But on asset managers, seldom will you find accounting fraud anywhere in the world. The hardest part on asset managers to assess is how strong is the brand, how much trust does the company evoke in the market in which it operates. So we've given you examples. We've used HDFC Asset Management as a case study in the book to explain why that company has built enormous brand value in the asset management industry. They've done a bunch of things over 20 years, which has made HDFC Asset Management a trusted investor for Indian companies. So the process is not dissimilar, whether it's financial or non-financial companies. The process that we've explained in Diamonds in the Dust is cleanliness in accounting, rationality in capital allocation, and then the hardest piece, the final piece, building of competitive advantages, building of moats, building a fortress around the franchise so that the invaders are kept out.
Thank you, Saurav. I'm tempted to take one last question. You know, I began with the theme of timelessness, and we've spoken about how the Tata Group is indeed a timeless institution with more than 153 years of history. And Harish, I am quite eager and excited to see what new things the group is going to do in the next decade or so, and how you develop the brand further. So I'm going to have a keen eye there. But one of our viewers today wanted to ask if Marcellus is a timeless institution. What do you guys think?
I think the viewers are the best judge of that. I think we're trying our best to build something which is bigger than whatever our modest efforts can amount to. And I think the good news, right? The reason why are we doing this in India? Why don't we do this in the United States or in the United Kingdom, right? Why are we focusing on building an institution in India? We're doing so because this country is a stage of development where we can see that the economy is getting joined up, courtesy road networks, communication networks, broadband, the integration of the financial system, the goods and services tax. You can see in the last 10 years, the country is getting integrated. As you integrate a country, as you formalize the economy. What is formalization of an economy? The formalization of the economy is groups like the Tata Group, a company like Titan, coming to dominate an industry like the jewelry sector. The jewelry sector, as everybody on this call knows, was dominated by mom and pop jewelers, right? So I still remember in my grandmother's era, the jeweler would come with a trunk, he would spread his wares across my grandmother's bed, and then people would choose. It feels crazy now that as recently as 30 years ago, that's how the jewelry sector used to be, right? As you network a country, you formalize an economy, that goes away, and you end up with well-run, professionally run, high-quality companies like Titan or Tanishq dominating the jewelry sector, right? That journey has just begun for India. I think we're no more than 10 years into that journey. We got 20, 30 more years to go as companies like Asian Paints or Titan formalize the economy. In that journey, Marcellus has a role to play because all of you on this call, the bulk of your wealth, right? I don't know all of you personally. The bulk of your wealth, I'm confident, is in real estate and physical assets, land and real estate, right? As the country formalizes, you will come into the financial system. A decade out, the bulk of your wealth will be in financial assets. So as we financialize your and my family's and my parents' household savings, firms like us have a role to play in the formalization of the Indian economy, which is why we chose to build Marcellus with our life savings. We chose to build Marcellus in India today rather than doing so in the Western world.
Thank you, Saurav, for the insight into Marcellus, and good luck to all of you. Before we close for today, I just like to go around the panel and ask all of you to share any closing remarks. We'll start with you, Harish.
Yeah, so Milee, I think I'll go back to what Saurav said in the beginning. To everyone who is at this event, I think Diamonds in the Dust has some very, very good lessons. I learned a lot from reading the book. It appealed to me greatly. And there are many lessons that it has left behind with me. It's got several examples, several stories of companies as well. Typically with a financial book that speaks to the head like this, it takes a few sittings. But for me, it was a very gripping book, and I completed it in a single sitting. So that's something I want to say as a closing comment as a reader more than as a writer.
Thank you. Thank you.
And thank you for that question.
Thank you. Moving on, Salil.
I think timelessness is something which all of us should really practice in our lives. We leave behind our names. That's probably the only thing that we'll all leave behind. And for that to be timeless, there's going to be a lot of effort, a lot of good things we need to do. And I think all of us should focus on doing those. And you should definitely read Harish's book, because there are stories which are not just inspiring, but which are touching, right? The owner of the largest diamond in the world, selling it to build a steel factory in India. If you read that chapter and you don't get inspired to do something which is larger than yourselves, bigger than yourselves, I think nothing else can inspire you to do that. So please go ahead and read that book.
Thank you, Salil. I love how all authors are promoting each other's books. I think that's a publisher's dream. Thank you, Salil. Rakshit, over to you.
Rather than just for the reason of promoting each other's book, I would actually say that in my last sort of 15, 17 years of understanding businesses, many of the Tata stories, some of which are highlighted in Harish's book, have been massively inspirational. So understanding, for instance, how Titan was built as a capital allocator, really. Right, Xerxes Desai picking up watches without having had any background in that space, then picking up jewelry, investing, learning from a few mistakes, and then getting it right in such a massive way to see where Tanishq is today, and then now moving on with sort of eyewear and various other capital allocation decisions. Similarly, understanding from TCS about the human capital aspect, understanding from the Tata Group about the brand, the trustworthiness and the dividends of that, and how it is built. I think I have to say, bulk of the learnings that we've had are around areas where Tata Stories has actually mastered over the last several decades. So yeah, it's great to be part of this.
I think I'll just echo Rakshit.
Saurav, over to you.
I'll just echo Rakshit. I think we should be very explicit. We need to write more books like this, right? We need a seasoned veterans of Indian corporate life like Harish.
Saurav, I was going to say that. Right. You've stolen my thoughts.
So then I'll just give you my entrepreneur's view. Whilst it's great fun to be part of Marcellus and growing a part of a rapidly growing business, it is bloody hard work. It is extremely hard work to build a firm in India. A firm which looks after the savings of, say, now 8,000 families. You need inspiration as you do that. Sometimes you run out of fuel. You run out of fuel because you just feel, how do we surmount the next obstacle? And that's where, when you read about firms that have done it 130 years ago, right, 100 years ago, you look at promoters, people who achieved the impossible, and Xerxes Desai in Titan in the 80s is a great example. It gives you the fuel, the mental, psychological fuel to pick up the threads the next day and carry on building. I think all of us, I'd exhort everybody on this call, let's put through more such stories of modern India, how the country can be built the right way.
Absolutely. With that, we come to the close of our session today. I'd like to thank all our panelists today, as well as our viewers. Thank you so much for participating and asking interesting and insightful questions. For my part, I would like to say that I feel Penguin has invested well. We have 4 amazing authors and many more. And we are looking at a long-term, timeless, and enduring relationship with all of you. So thank you so much for sharing your knowledge, sharing your stories, and keep on writing. Thank you very much.
Thank you, Milee. Thank you, everybody.
Thank you, Milee. Thank you for moderating this so well. Thank you.
Thank you, Harish. Thank you, Milee.
Thank you,
Thank you.
Thank you, Saurav.